Welcome back once again to Small Caps, ladies and gentlemen, and it is our first catch-up with Truth Bomb Tony for 2022. I guess I can still say Happy New Year, Tony Locantro from Alto Capital. How are you, my friend?
Oh, pretty good, Kerry. I had a fantastic break. Went down to Albany, stayed in a bit of a cabin, and there was a beach down there called Muttonbird Beach, and I'd highly recommend it.
Oh, okay. Muttonbird Beach it is then. Muttonbird Beach. Well, you know what, mate? If we could get over there, we would, but your bloody Premier has once again put up the Iron Curtain. Or should I say he hasn't taken it down?
Well, news polls suggest that he's supported by 75% of the WA population. But if you go onto Twitter, it's heavily skewed against him. So, he's talking about, the booster shot before we let Omicron spread. So I've just got to live with it. I managed to find a chest freezer without a month wait. So I'm going to hit the slow cooker and wait for this deluge to come. But pleasingly, my 18-year-old son got Omicron. He's in Devonport, Tasmania. And 3 days later, he gives me a 9 out of 10 score for how he's feeling. So, but I don't want to test it. Life's good here. I'm trying to get out to as many restaurants and enjoy life until we let other people in. But yeah, we certainly feel isolated.
Look, we won't go on too much about it because the last time I spoke about this topic, I got deplatformed. So let's go to the markets. It's safer. When we spoke in December, everything was looking pretty rosy in the kitchen. And now, as I speak to you today, it's been a horrible week.
Well, yeah, we had that volatile session in the US. And the Australian CPI was up 1.3% and the annual inflation rate is 3.5. So that's actually outside the RBA's band. And now Bill Evans from Westpac, who I do have quite a bit of time for, is suggesting a rate hike in August. So I don't know when you're at 0.1, do you go up to 25 basis points or you go 0.4, 40 basis points, and you send me a voucher for a bowl of Verve. So, I've got a good memory. But look.
And by the way, sorry to interrupt you, Tony, it'll have to be a voucher because your borders might still be closed by then.
Just get me a Dan Murphy's voucher or something like that. But there is going to be absolute carnage in markets, and I cannot stress that more to viewers because, sadly, the dumb money continued on, the uneducated money. They went in and bought houses in Sydney at 14 times price to income. There's plenty of nice places on earth, such as Perth, which is 6 times income, and a much nicer place than Sydney. So,
oh, steady on. I still love Sydney, even though I'm not living there.
Well, fortunately, I was a cop for 8 years and I got to know all of Sydney. I used to go to North Sydney Railway Station because that's one of the best pervs in Australia. I used to ride ferries, trains, and I got to know the whole area. And now, houses out East Broken Hill, I call it, are over $1 million. And it's just absolute madness. And the average mortgage in New South Wales is, 780 grand. And if you look across at our cousins across the ditch, their rates are at 0.75. And how can people in Australia, the mortgages are over 5, afford 40 to 45 grand interest bill? So rates have to go up. The economy, inflation is starting to get out of control and unemployment rates low. So it will be carnage in Sydney and Melbourne. That will spread to Brisbane, even though the narrative's more popular. Adelaide just flatlines, and there's probably a bit of growth left in Perth. But the government cannot bail people out. And those that bought at the top in Perth, 2006, when we were briefly more expensive than Sydney, have spent the last 16 years underwater and no one helped them. So, you look at those markets, you look at the stock market, the NASDAQ has corrected in an orderly fashion. The Dow, I think, still has a lot further to fall. And a couple of weeks ago, I went back into the BBUS and BBOZ and I chucked 160 grand at both as an insurance policy. I think our market is due for a correction. A lot of the bank stocks are starting to come off. So it's going to be a real bumpy ride on the index. So, we saw 2.6% down today on the ASX 200, and that spread to smaller cap stocks. So people panic. I don't know what threshold they have. If our market falls 2%, they throw out all their quality small caps. So it's time to hang on. I actually went shopping today. I bought, each of my kids got some more Narada. I picked up some more shares as well. So, from my 23 years,
yeah, but Tony,
normal.
Yeah, Tony, but you just said that there's more to come. So why would you be picking up stocks now if you think the market has still got further to fall? Wouldn't you be waiting for this mother of all crashes that people keep talking about? Will it happen? I don't know.
Well, my theory is pretty simple. Small companies always become bigger ones. We can have a 3 to 5 year bear market where major indices grind lower, but the money will go somewhere. So I look at a company. If it's good value, I'll buy it. I'm not trying to time it. If we do get a couple of thousand points off the Dow, I then, with the BBUS, have liquidity to sell some and then buy my stocks at half price. And that's how you make a shitload of money in the small caps.
So would you suggest that those people that are fully invested, if you like, into the market at the moment, that they should possibly either A, take some profits, or B, just have a little bit of cash on the sidelines and start to look at some of those opportunities as they come in? Because if you don't have any liquidity, if you don't have any cash to buy in, you're just sitting there watching the show fall around you.
Well, when I started in the market and became really keen, this is about 1998, I spent 4 to 5 years buying rubbish. And what people have done is they've bought all these fad stocks. Now, I'm not saying that lithium, uranium, and other things ending in IUM aren't going to do well, but you're going to have a few companies get into production, but the rest of those stocks, honestly, are overpriced rubbish, and they will lose 70, 80% of the value, or they'll go dormant, and the directors will then jump on another bandwagon, whether that's eggs, coffee, childcare, retractable syringes.
Okay, hang on a second. Now, we all know that governments around the world are going for this zero carbon emissions, where we're talking about the fact of the matter is that there is a supply shortage in certain commodities. And I'm talking things like lithium. Mm-hmm. There is a massive gap between what is required to make all of these EVs and what is available at the moment. So I would argue against potentially saying that all of, and I know you say that a lot of them won't make it, but there is a supply shortage and there is money being thrown at it. I mean, there's Zenith Minerals just recently did a deal with a Saudi Arabian company. The Kingdom of Saudi Arabia is starting to look at this supply demand, and this, I hate to use it, but I'm going to use it, they're pivoting away from that oil and gas, the fossil fuel narrative, into this sort of the EV revolution. And they're doing that by investing heavily into some of these stocks. So my question to you, Tony, is when people are looking at things like this, I think the lithium and the uranium, which is zero carbon, have got great opportunities. Why would you dismiss it outright?
I'm not dismissing it outright. I'm just saying that a lot of the companies are shit. And they've picked up leases and suddenly they attract $100 million valuation. Now, the narrative is good. The narrative will suck you in, but the share prices are well ahead of themselves, and it only takes an exhaustion of buyers and all these rubbish bandwagon jumpers are going to come off. And I've seen it every cycle since the dot-com bubble. So, yes, uranium stocks got well ahead of themselves. Bannerman 10 bagged from 3 cents well over 30. So I've got my clients out of that. ELA went 8 to 9 times. They got well ahead of themselves. So you can talk about supply shortages all the time. Zinc, there's been talk of that shortage for years, yet zinc stocks do bugger all because they're not sexy and they're not talked about on all these channels. So, you just can't buy a narrative and go in and think, well, if I buy this crap company with 100 mil cap and expect to make money. And I've seen it through 23 years of advising, through every cycle, every fad. But once that money and FOMO dries up, a lot of these companies are going back to becoming shells, and it keeps repeating itself. So if you go back to the real uranium bubble, 2005, 2006, out of that, Paladin, and we had a couple of takeovers, but a lot of those 150 stocks turned to crap. And then, you look at hydrogen. Yes, hydrogen cars, but a lot of those hydrogen companies are going to be, it's a decade away.
Yeah, it is. I do agree with that.
And these companies, they might transform from a biotech to uranium into syringes, into childcare, and suddenly they're a hydrogen company. But So what would you say to our listeners out there? This is the first time we're chatting in 2022. The markets have been, the word of 2022, in my opinion, is volatility. It is a very, very volatile market at the moment, and people are confused. And I guess it does depend on whether you're, 21 or 81 as to what your risk factors are. But in a market that is as volatile as it is at the moment, what would you say to people out there that are listening and thinking, what do I do at the moment? Well, my last phone call was to my 20-year-old daughter.
Okay.
I told her, forget your dream of buying a house in outer Western Sydney. A lot of those suburbs will start, once you see people not keeping their lawns. I said, instead of dreaming of buying an overpriced house, start buying silver every month through the Perth Mint, and I'll help you along the way. So to me, gold and silver are the safe haven. Banks are paying you bugger all interest. I'd look outside the financials if you're after yield. I'd look towards stocks like Beaker Cheese, Ingham's, which have had issues. And if you want something solid, you look at Telstra or Tabcorp. So, Tabcorp is one of the first stocks I'd buy in an unethical fund. Or you look at the spin out of Woolies, Endeavour. So there are stocks you can buy outside the banks, but from my way of thinking, I look at companies potentially that can go 3, 4, 5, 10, 20 times in price by spotting them early.
Do you think you mentioned silver, and I will bring it out and say silver, gold, let's make it precious metals. Do you think that, and there's a lot more gold stocks on the ASX than there are silver stocks, do you think that they're undervalued at the moment? And by the way, ladies and gentlemen, the gold price is above 1840, which is actually a very good price to be above at the moment. I was talking to Gareth Soloway recently, and he was saying that he wouldn't be surprised if there's a 3 in front of it this year with the gold price. What do you think's driving it? Is it the inflation? Is it the volatility? Or is it the fact that Bitcoin is going, see you later, and that money is moving into the safe haven of gold and silver?
Well, I look at crypto. Now, there's probably over 10,000 cryptos, right, which is double the number of religions, and every single religion is right. Every religion is correct, right?
That is correct.
Now, I looked into crypto. It is the world's biggest Ponzi scheme. Now, all the linen jacket parade and black T-shirts with a logo will say, you're full of it, Locantro. Yes, you can trade Bitcoin, you can trade Ethereum, but a lot of these young people are attracted to being able to set up a crypto account and trade it on their mobile phones. Now, if you've got 10,000 cryptos, how do you do your research? You're buying it in the hope there's a greater idiot out there that will pay more than what you did. And unfortunately, a lot of our youth have had their crypto portfolios cut in half in a couple of weeks. Now, these people aren't going to go to the ASX and fund companies that actually create jobs and pay tax. And my biggest successful investments have created mines, paid tax, or are working on solving issues such as cholesterol and traumatic brain injury, not having some creator and have porn stars promote something that's worthless. So, look, crypto is there, people can trade it, but you're gambling, essentially.
We're gambling a little bit with small caps as well, because a lot of this, history will say that a lot of the small caps, they don't make it. Like some explorers, they spend a lot of money and they don't get anywhere. So it's kind of similar, isn't it?
Well, if you can spot something early, if you can spot a leader, I keep using Bill Beeman. You've got other people in the gold sector like Raleigh Finlayson. You've got people in the biotech industry such as Paul Hopper that create hundreds of millions of dollars in wealth and actually make breakthroughs. Now, you mentioned Zenith. Zenith is a spin-out of Duralia, which was a high-quality company that went from pennies to a few dollars. So some of these mining companies can create serious wealth, and the key is to find them. Now, already on my top stocks, Pac Gold looks as though they're
Oh my goodness, what happened to them? They're just wow. Pac Gold, like you've said that from the get-go. You have mentioned Pac Gold. I think they closed at like 80 cents today.
80. Well, it looks as though Tony Schreck and the team are onto a monster gold deposit. So, the De Grey, a lot of people spotted De Grey, but they've got visible gold. They're yet to release the results, and they've got a lot of alteration, and it's 30 kilometres of strike. If this turns into a multi-million ounce deposit, there's still multiples left from 80 cents because there's only 50 million shares on issue.
Yeah, that's true.
So you're buying a $40 million company where others with a couple of leases are capped at more. Now, I'm not saying to viewers that this is a sure thing, but I have not sold a share in Pac Gold because once you're onto a good thing, stick to it.
All right. So would you suggest that people should, like we're talking small caps at the moment, but do you think that they should also have some exposure to say, the BHP, the Rios, the Fortescues as well, just to give them that spread? Because BHP have got gold, but they've also got copper and iron ore. Is that something that they should have some exposure to?
Yes, but at the right price.
Okay.
These companies are far too big. They're reliant on money flow from institutions. If institutions, large investors want to switch out of banks into resources, these things will run. But I'd like to value a company on one A4 page and getting to know management and spot these things early, or when there's a big discovery and the market's asleep, you can then buy it and you're essentially de-risked. But, looking at portfolios, I think the ASX 200, All Ords, ASX 300 have got plenty of room to fall. And if you're looking at those style of investments, as I said, look away from financials, build yourself a blue chip portfolio and have a bit of punting on the side. So a lot of people will go for 80% solid companies, 20% speculation. Unfortunately, I'm 100% speculation.
Yes.
But I do have 14% of my portfolio in ETFs just in case we do get that market crash.
All right. So you just said just in case we get that market crash. Do you think it's coming?
Well, I hope that it can correct like the NASDAQ. if we do get a few thousand points off in a session, we're going to cop it. We've had COVID meltdown in 2020.
That's right.
We had 2008. We had the GFC. So there's always going to be bad days. I think the US market, I think the Nasdaq's on a PE of about 27 to 30 times. During the dot-com bubble, I think it was 100 times.
Oh, wow. Good.
Yeah. And I think that a lot of our stocks, the average PE on some is about 16. So, it could fall 20%. And a lot of investors and speculators have not seen a bear market, and it's like driving a car without reverse.
All right, Tony, coming into 2022, let's have a look at, if you were looking at the market as a whole and different sectors, would you favour one child over the other? In other words, we've got tech stocks, we've got biotech, we've got commodities, we've got industrials and others. Do you have one favoured child over the other, or do you think that a spread is best for investors?
I think those that are watching small caps are attracted to how we talk about small companies. So I am equally invested in biotech and mining. Actually, no, that's a lie, Kerry. Most of my wealth is in biotech. But
is that right?
Yeah. Well, I floated both Exopharm and Narada and Radiopharm. So I've thrown a couple of $100,000 at Radiopharm on market. I've chucked a lot of money at Narada, Chimeric, and others. I've just gone pretty hard into Adalta, but I bought another 300,000 red metal a couple of weeks ago because it's got 100 million ounces of silver, and that's the type of stock you want to hold into a silver frenzy.
Why do you think there's going to be a silver frenzy? I mean, so, if you go back in time, if you go back over history, at one point it was $50 going way back. And then, of course, we had the Hunt brothers try and corner the market in silver, and that drove the price up for a while. But it's really not done very much. And, people like Warren Buffett would say it's a lump of metal. Why do I care?
Well, he was selling under $5.
Yeah.
And Kodak were going to digital photography, and they've been moaning the end of silver. But silver is a precious metal, and it has its place in medicine and antibacteria. It does have a lot of uses. And if you look at markets, iron ore and coal went on massive runs, and they're not sexy. So I'm thinking, yes, in 2010, 2011, silver did go up to about $50 an ounce, and it can happen again because the market is very tight. And if stupid money can drive Bitcoin from 3,000 to over 60, why can't silver double?
It's a good point, and I hope you're right, because I have got a bit of exposure to silver, and I have some bullion. All right, Tony, the last word goes to you before we wrap up this one, and I'll see you in a couple of weeks' time. People out there very, very nervous, people looking at this volatility, people looking at the fact that inflation is here to stay. But as you rightly said just before, the unemployment rate is way, way down, but potentially there's still a lot more volatile issues along the way. What would you say is your final word to our wonderful community out there at the moment?
Be fearful of rising interest rates.
I've got a friend of mine who would completely disagree with you, and maybe I'll bring him and you on together one day for a bit of a Barney, and I'll sit back and watch. Now, for those of you that listen to what Tony was saying in terms of precious metals, we do have a virtual gold conference on the 10th of February coming up. We should have been meeting, Tony. You should have been chairing one of the sessions. We should have been meeting in person, but thank goodness we've postponed it till June, given that the Iron Curtain is still up there in Perth, or should I say WA. It's been great to see you, my friend. I will see you again in a couple of weeks' time.
Yeah, look forward to it as always, Kerry. And as I was saying to a new client 2 phone calls ago, I really love you, but I think you might be a little bit wrong.
There's a bottle of Verve on it, ladies and gentlemen. Let's see who's right and who's wrong. I do like my Verve. Thanks, Tony. We'll see you soon.
See ya.